Good morning, everyone. Let's get right into the stock market. Okay, so we are in kind of a crash mode right now. The market seems to be crashing some more, continuing to the downside exactly like I've been talking about really since the beginning of the year. All right, so if you've been following my channel, we've been shorting it since January 4th, and we have continued to pretty much be on the right side of the trade there. So we are going to look at the charts here. Guys, drop me a thumbs up if you find value. Again, the reason why I'm able to find these trade ideas is because I have the skill set that's available that I've learned over many years. I put a course together that teaches you all these skills that helps you analyze the charts, manage risk, do trade, trend analysis, all the different concepts that I use on a day-to-day basis and that I go through here when I'm pointing out these trade ideas on this channel. I put that in the course, link in the description below. I priced it affordable. It's not outrageous. Go compare me to other trade people on YouTube. They're in the thousands of dollars. I priced mine, it's at $149.99, okay? So I made it accessible. Take advantage of that if you haven't done so. Link in the description below. All right, so I got SPY up here, but I'm gonna jump over to Qs. All right, Qs, 364, and you can see here on the hourly, I think we basically dipped down to 299.71. So we have hit that initial 300 price target or profit target that I've been talking about since, basically January 4th. I've been talking about us coming down to 300. We're pretty much there now. I'm waiting to see for any kinds of signs of a reversal. So one way to treat this is you can just trail your stops. It doesn't make sense to start shorting brand new shorts, I think, right here, but maybe trail your stops and just keep a tight rein on it because we could continue to crash. All right, I just want to throw that out there, and I'm going to point out the reasons why what I'm seeing in the market right now. Again, just note we should be coming into some decent support right here. It's about 298 really, and you can see back here on the daily chart that was former resistance, and then it was sorry about that, then it was support right here, and we're right there. So coming into pretty decent support. We still have bullish divergence, all right, that hasn't been taken out. See the momentum, how it's just moving up, and we haven't made a new low. So that's one key tell I'm really looking for. Do we take out the divergence? Can we take out the divergence? If we can't, then we're probably going to get a bear market rally right in this area, okay? If we do take it out and we come down and maybe make a new lower low in the momentum, that tells me that, it's very obvious we're in a bear market. We can continue to crash, and we don't see signs of a bottom yet. I'm not seeing signs of a bottom in terms of volume, in terms of selling volume. This market is very complacent, all right? So people are not panic selling yet, all right? So usually to see a bottom, you want to see panic selling and a spike in volume on a big down move, and we're not seeing it yet, so we might have more downside. Now, one of the charts I've really been really focused on is Apple. So I want to focus in on that really quick. And we'll show you what we got going on here on the daily chart. Bearish rising wedge pattern, okay? This is a big bearish rising wedge pattern. Zooming in, started to build negative divergence. Pretty much, it didn't have like perfect negative divergence, but we kind of started to build it right in here a little bit on the hourly chart. But the main thing I'm really watching is this support line of this bearish rising wedge. You can see we have multiple reactions on this wedge. It was also following the 200-day. We took out the 200-day just the last week, and this morning taking out the top of that support. So this looks like a sell signal to me, unless they can step in today, run in and buy it, recover this, and give you a false breakdown. This would be a sell signal. And the fact that we're getting a sell signal just now in Apple, the largest mega cap tech stock, largest stock in the market, and a big component of the triple Qs, tells me that if we're going to get that sell signal confirmed and it's going to, we're going to see impulsive selling, then Qs actually has a lot farther to go. So going back to Qs, I did put out a profit target all the way down here. This is your pre-COVID highs, which is right here at 239. That is a potential target here on triple Qs. This lower trend line here, I've kind of moved this one around a little bit. So I'm going to just kind of continue to look at this trend line here. That's your trend line from your price channel from your bull market going all the way back to 2009. All right, so there's a price channel, but I've kind of moved that around a little bit, so I might be off slightly. The point is we are coming into decent support, but we are seeing the major components of this indice here, triple Qs, just starting to trigger a sell signal. So that tells me that, you know, this target down here is becoming an option, all right? And it's about that 238 level right there. That's your pre-COVID highs, all right? So we're going to keep that on the table. Scanning across the board at some of the other FANG stocks, the next one in line, Microsoft, you can see here just continuing to sell down. Now we're coming into some minor support, very minor support. I don't even know, we might just slice right through this, 263.50. And I see a lot better support right down here, all the way down here about 237, 240 on this trend line. Okay, looking at that trend line, if you roll out on the daily, we've got 1, 2, 3 reactions there. So coming down to there would make sense to get a bounce. So I think that's where we're heading. I'm just seeing we're just at the point now where the major cap tech stocks are starting to sell off. So we've seen a sell-off in a lot of the junior stuff, the speculative tech stuff, and now the major cap tech, which is where most of the strength has been, is just now starting to sell off and come down. So I think this move might just be getting started, which should really drag the Qs down. And I pointed out those potential targets now. Okay, oil. So oil, it was rejected on the trend line. Here's XLE. I kind of talked about this. We have this uptrend line here. Negative divergence was building, all right? We broke, so you got a sell signal. They ran it up for a back test for 3 days last week. Okay, today, impulsively getting rejected. We gapped down and selling down impulsively, down 6%. That is a clean and clear rejection of that trend line. That tells me this is a back test, and we're now starting the downtrend in oil. So look for oil stocks to come down. I would say at a minimum down here, probably hit the 200 whenever that shows up. But I would say down here at about 62.50 should be a target for XLE. A lot of these oil stocks that I've talked about, here's CNQ continuing at that bear flag. So the target now is down here about 55. DVN ran up on earnings. They recovered it, but look, boom, big rejection and a sell signal today. So that is a sell signal in DVN. Again, it's just continuing to sell down, and we've got a nice solid sell signal down almost 10% today. So that should continue lower. All right. Looking for lower, at least a tag of the 200-day, probably down here about 45.40. 45.50 for a minimum target. Ag commodities are selling off. Just a quick glance, they're all starting to sell off. So it looks like we're getting a correction in the inflation trade, and this is what the Fed was basically attempting to do. They've raised interest rates to 75 basis points, so well below inflation and all that. But the market's just treating it as a reason to correct, and we were looking for a correction in a lot of these ag commodities. This was a really crowded trade. Oil stocks, very crowded trade. So I'm expecting a continuation of the correction in these. And we'll look to buy these things at a future time, after they sell off, because these things are in a bull market, most likely, a long-term bull market. So we'll look to start buying these things after they correct. All right, that's what I see going on there. Gold. Okay, so gold bullion is still holding the bull trend. Down here, 1840-ish is the area of support, kind of a buy zone. Still holding it down a little bit, but not that impulsive. So in general, gold is actually showing pretty relative strength. The miners are definitely taking a beating. They move around, they will move around. They are stocks. So if you get selling in stocks, the miners should, they'll sell off. But we should see a snapback in these miners. But again, I'm not adding to these. Here's GDXJ breaking this support area that we had. Looking at the hourly chart, still have bullish divergence. It's still intact, but everything's kind of pointed straight down. So if we continue lower, we're going to burn through that divergence. So we'll see what happens there. I'm not adding to these right now. They kind of caught me a little bit with this gap down, and they're selling down. So, well, I'll give it a little room, but probably not too much more, because this has the potential to sell all the way down to this lower trend line down here at about 27, 28 bucks. So don't want to give it too much room. Again, not a huge position. We want to spread our positions, but in looking at some of the other miners, some of them still look okay. And some look like they're breaking down. Here's like MTA. You can see it's breaking this lower support line. This is a bullish falling wedge, okay? Bullish pattern. We have bullish divergence. Let me zoom in here, see if that's actually been taken out. Yeah, see, that has been taken out on the PPO. And the RSI hasn't been taken out yet on the RSI, has been taken on the PPO. Bullish pattern breaking to the downside, but right before earnings. So I got to give this one a little bit of room because of just right before earnings. We still have bullish divergence on the RSI. They might, this might be a stop raid, kind of a washout move, and then they'll rally this thing on earnings and it will continue higher. So got to give that one a little room. And in general, I'm giving the miners just a little bit of room just to see if we, just to see if we can hold the divergences and whatnot. Because gold is holding strength, relative strength, and the miners are selling off, but they all have some bullish patterns still. So, yeah, that's what we're going to continue to do. And again, I don't have huge positions in these miners. I just started building long positions the last couple weeks. So, I'll look to continue to build on these if I can find key areas of support. But today, not really doing much on these. Something like AG, right at support right now, you can see basically support, support, support. This is a bullish falling wedge. Broke to the upside, came in for a back test, broke down into the wedge, and we're hitting that support line right before earnings. So again, it is an objective area to buy this thing, and but you gotta get through earnings. And we did, if you look at the momentum indicators, we're taking out the bullish divergence. All right, so that's not great to see that get taken out. We don't have bullish divergence on this thing anymore. So maybe we'll build a bottom down here. We gotta wait. I'm gonna wait till earnings. Small caps, IWM. You can see basically continuing right down toward our profit target at 173. I really got it at about, I was kind of looking at this, and if you go and you look right here, it's about 170.50. All right, move this up just slightly, and it's right about there, 170.50. So I'm going to go ahead and pull this one away, and we'll just say it's right there. So we've got, we're almost there. Got a little bit more to go. But again, I've been talking about this target for a while. So we'll look for some sort of a bottom down here. We still have bullish divergence. That's one key indicator. Does this get taken out? As I zoom in, you can see we still have it. So if we dip down and hit this 170 and we still have this bullish divergence, it's very likely we're going to find a bottom down here and get some sort of an impulsive rally. Okay, so that's what I'm looking for on that. Lower prices. Do we take out the divergences or not? Here's a trade idea, CAR. Okay, this was one of those meme stocks, very speculative stock that the retail traders were buying and pumping up. They pumped it right here. You can see on this earnings thing, it was up huge. I think we're probably getting a sell signal today. So on this one, you got the daily chart coming off the COVID lows. All right, look at all the tags of support. We hit it there. There's another tag. Brief little bear trap right in here. That was clearly a bear trap. But again, that bear trap, you can see that had bullish divergence, all right? So when you dip down and hit the 200, you made a higher low, and you had bullish divergence. So that was one tell. But now you can see we've got negative divergence right here. So see the momentum, how it's dropping off right through here on both momentum indicators, while price slightly made a new higher high right there. That's a divergent high. So now that we have negative divergence, and we are breaking the trend line with a sell signal today. All right, there's your sell signal. As long as that can hold on the daily chart, and I think it probably will, that's impulsive selling. At a minimum, that should bring us down to the 200, but I suspect much lower, okay? So we've already hit the 200 once here. I think we head to the 200, probably get a 1 day, 2 day bounce, something like that. break the 200, and down we go. The target on this one I really think is probably all the way down here at about 52. All right, that's your pre-COVID highs right through here. Good, that was good resistance, and I suspect we'll fall down to that area somewhere, and that should be good support right down in there. Okay, so I just shorted this one today. I'll probably continue to add to it if it continues to work, or maybe add to it on a bounce of the 200, or we get a back test or something. But I like this as a sell signal and a short trade initiated today. Here's KHC. This is Kraft Heinz. Again, this we continue to look for gap fill. It's pretty obvious this is going to run up and do gap fill, showing relative strength today, up almost 2%. Gap fill's at 48 right up here. So it's a very obvious level, so you might not want to wait for the exact gap fill, but I think it's very probable. You're probably going to want to step in a little bit early, maybe at 47.30 or something like that, and close out your position. Or we might overshoot it, so you could always just trail your stops, all right? Trail a stop loss. We are starting to have some negative divergence, so if we run up and do the gap fill with negative divergence, that's likely going to be the top, but we could overshoot it. Again, looking like it's going to do that gap fill. The SPY, S&P 500, we're seeing weakness in this one as well. So weakness across the board. The market's selling off. We're going into a bear market. Again, I've been talking about, I've been treating this as if we're in a bear market because, again, I've been talking about sell the rips. We need to short the rips. We're going to enter a bear market. By the time you enter the bear market, it's too late, all right? If you wait for the media to tell you, oh, you're in a bear market, you've lost your money, you've lost your opportunity. And I've had a lot of comments saying, oh, this is just a correction, there's no reason. And I've made my case technically why I think we're entering a bear market. Price action's confirming my analysis now. So you can see basically the SPY from the top to where we're at now, down 16.5-ish%. Another 4%, 3.5% to go, you're in an official bear market. So whether I'm right or wrong and we get that 3.5%, I suspect we do. But again, it's, now's not the time to just load into shorts necessarily, because, you want to short on rips into resistance. Once it becomes obvious, yeah, we might have some momentum to the downside, but I would expect we're going to run into a bear market rally sometime. It's going to be impulsive, so we got to keep an eye out for that. Can't stop, won't stop, GameStop. All right, so GameStop is selling off impulsively now. You can see the selling starting to increase. We're down, 12%. This is exactly what I thought was going to happen. I said that basically we took out this area of support right here at 134.53, and I just expected the selling to be pretty impulsive. And I think that impulsive selling will continue. You can see we were kind of drifting lower, and now, boom, they're gapping it, and we're getting bigger red candles to the downside. So look for that. Look for the selling to increase. We should see larger and larger red candles as this thing pretty much collapses down to, 39-ish, down in this area. We should probably get a bounce, some sort of a bear market rally, and it'll be impulsive. So that's what I'd look for. But again, this thing has the potential to go a lot lower, and probably at the end of the day will end up down at the 1750 area or even lower. All right, this thing was pumped up on just nothing. So now that the market's starting to show that it's going into a bear market, this thing should just collapse basically. So looking for that. Here's another one that was kind of pumped up on nothing. Now this obviously isn't more of a real company. They sell cars. They're profitable, I believe, not by much, but they're profitable. So I'm not looking for Tesla to absolutely just collapse like GameStop would, but I am looking for Tesla's way overvalued, very, very speculative stock, and that all the speculation in the market is starting to unwind. So this should be one of them. Here's the near-term support, 780. All right, that's the level I have marked out. We're almost there, approaching that. So maybe we get a bounce there. I'm not so sure though. Maybe we just slice right through it. We got decent support down here also at 550. So that's kind of the target, I think. We might just run down and hit that 550 area. Okay, looking for more downside on this one. UPS looks like it's just kind of consolidating. We should break down if the market's going to continue to break down. My target right now on UPS is probably about 157-ish. So we'll look for continuation on that one. UMP continuing lower, breaking down. Near-term target 215. Probably step in a little early and cover that one. There's some support there, decent support there. And that's also the projected target on this bear flag pattern I've been talking about. So that one, PANW, just absolutely collapsing. Again, the sell signal, I pointed it out, came on May 5th. All right, if you were following my channel, you would have gotten alerted to that sell signal. And we've basically just collapsed ever since then. Even if you took it at the end of the day, it's still, what, 12%, down 12%. Now we're at some support here, so we'll see if they can recover this because there's support about 475. They might step in and bid this thing up and hold this support level. If they don't, look for it to run down to this gap entry area at about 421, okay? At the end of the day, there's a big gap to fill right here at 374. I think we run down and fill that gap. It's just sometimes hard to call the exact way we run down and fill that gap. Maybe we hold here, but ultimately we probably do this, bounce, maybe do a back test, come down, consolidate for a little while, run down and fill the gap. Okay? So that's what I'm looking for, but good, looking good for more downside. Qualcomm continuing to sell off. Again, they gave us a really good short entry, basically right here on earnings, all right? This thing rallied right up to this downtrend line on earnings. This is where I shorted it right there. Had to ride out a little bit of a pop against my position, but ultimately still looked okay. And you can see we're just rocking this downtrend right here. All right, we do have bullish divergence that's in play, so we need to see that get taken out. But, you know, I think we're probably going to head down to this profit target, 123. Good support on this one down there. You can see all resistance, then it was support, multiple tags of support. So that would be the level that I would be probably looking to cover my short trade for a bounce. All right, down there at that 124-ish, 123.50, somewhere right in there. So more downside in the short term. And Alcoa, again, I talked about this bear flag right here. I took the short on the breakdown of the bear flag. We didn't catch it way up here. We caught it right here. So the bear flag's just about resolved. All right, we're below the 200-day. I think, you know, we've actually met the target for the bear flag now, which is basically right where we're at. We've got some support. We got some support right about 52.32. I'll probably look to take some profit. But there's better support right down here at this 45.60 area. Good support right here. So we might run down and hit that. That would be good support. So I'll keep an eye on this one. Maybe just trail your stops. Again, this one has met the bear flag, which kind of went like this. You flagged out and then you roll down. So yeah, keep an eye on that one. Maybe keep a closer reins on this one since we are you know, coming into some support. We met the bear flag and it's down 11% right now. Guys, that's all I have for today. Drop me a thumbs up on your way out. Check out the course. I think there's good value there, and I'll catch you on the next one.